Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Qingyi. Good evening. Today is Wednesday, January 7th. I'm analyst Jita. Remember to like, subscribe, and share during class. If you have any investment questions, feel free to leave me a message. If I don't get to answer your question, I'll make sure to follow up with everyone in tomorrow's class. The weather is getting colder and colder these days. When I logged on recently, a lot of students said it's really chilly. Just to let everyone know, tonight is going to be even colder, and it'll keep getting colder all the way until this Saturday. So no matter if you're in the north, central, or south, remember to dress warmly and don't catch a cold. The weather is changing a lot right now. Even though it seems like it's just a dry cold and there's no rain, the wind is still really biting, so you really need to pay extra attention. Good evening, everyone. Let me see who's online. Hui Huinjuan, Mei Daizi, good evening. And to the staff, hello and good evening. Also, Xiaoma Lu, Fei Yu, and who else? Yulanje, good evening. Oh, and N.A. Ya, Alaya, and Alice Fu, good evening to you too. Hector, hello, hello. And K. Coco Lee, good evening, good evening. Someone just asked, Xiaoma Lu said that today the Taiwan stock market had a huge trading volume, right? 850 billion NTD. So people who are already in the market are asking when they should exit, and those outside are wondering if they can buy in. It's always like this. If you don't have any stocks in your hand, you'll be thinking, when can I buy in as the prices go up? But once you have stocks, you'll start wondering when you should exit. Actually, every stock is a bit different. Each has its own characteristics or is at a different stage. So the timing or order of entering and exiting isn't always the same. But everyone should stick to a simple logic and principle, which is this. When there's a surge in trading volume, try not to chase after it. Really try not to chase. When the volume shrinks and there's less trading, that's usually a pullback. For example, when the price is dropping or pulling back, as long as you see the volume shrinking, take a closer look. As long as the pullback reaches around the current moving average, whether it's the 5-day, 10-day, or even for those planning for a medium to long-term position, you might look at something like, if the price pulls back to the moving average on the monthly or quarterly chart and the volume shrinks, then you can try to look for a buying opportunity. But whenever the price surges upward with a spike in volume, you really should avoid chasing it. Because when there's a big spike in volume, what does that usually mean? You have to ask yourself, why is the trading volume exploding? If the volume is that high, it means a lot of people are buying, right? But on the other side, there must be certain major players, institutional investors, or company insiders offloading their shares. That's the only way there can be so many shares changing hands. So when you see a huge surge in volume, especially when that big volume appears at the top or at a high point, you need to be a bit cautious and have a sense of risk. If the volume is light, there's still a chance to reach new highs. When there's a new surge in volume, for example, NT 850 billion, like today, the Taiwan stock market had a new surge, there's still a chance to reach new highs. But that new high is often a signal to sell your stocks, to take profits. Then, when the market pulls back and volume shrinks, look for a new buying opportunity. This method applies to individual stocks or the index. Remember, when volume shrinks, look for entry points. When there's a surge in volume, especially at higher levels or when the price is high, be careful. If the price keeps dropping, if the price has dropped significantly and is at the bottom, and then there's a big spike in volume, that could mean it's a turnover volume, indicating accumulation of shares. In that case, the outlook might be different. This is a simple response to Xiaoma Lu's question and today's discussion. All right, good evening, Caesar, and also Frank Franklin playing around. Chinese New Year is coming soon, wishing everyone prosperity. Hello to everyone, and good night as well. Now, let's first take a look at today's investment highlights. Actually, there are quite a few news items today, especially since at 9:15 tonight there will be an economic data release. Let's take a look together. The first one is the verdict on January 9th. What is Greenland, which stirs up a pool of spring water, waiting for on January 9th? They're waiting for the tariff war. So what about the US Supreme Court? It's expected to rule this Friday, January 9th, on whether Trump's tariffs are legal and whether they can continue to be enforced. I'll talk to everyone about this in a bit. No matter what the Supreme Court decides on January 9th, whether they rule the tariffs legal or illegal, what kind of mindset and strategy should we use to respond? I'll explain that to you later, so there's no need to worry too much. After all, January 9th is almost here. Just remember the strategy I share with you later, around January 9th. Just pay attention to the outcome of the verdict, and of course, what's even more important is that this Friday, the US non-farm payroll numbers and the unemployment rate will be released. I actually think that these economic data are relatively more important than the verdict announcement. I'll explain why in a bit. Another thing regarding geopolitical risks, there's the situation in Greenland. We're talking about blowing the spring water, which basically means there's not much going on in Greenland. Nothing major, really. It's just that geopolitical risks are being dragged in again, so that's why. That's why this young red Taiwan, Greenland, comes up again. Today, Greenland is once again making headlines in the realm of geopolitical risk, stirred up by Trump. So is this whole Greenland issue actually related to yesterday's sudden spike in the pizza index? Maybe it does, maybe it doesn't. Anyway, listen to me talk about the story of Greenland in a bit, and you'll probably get a clearer picture. As for the industry side, NVIDIA has 3 major new products. We mentioned yesterday that NVIDIA's Jensen Huang specifically talked about these 3 main new products at CES. This development architecture, these 3 major new products, of course, involve a lot of upstream and downstream supply chains. Some companies are happy while others are worried. So which companies are actually facing concerns or troubles? Today, I'll give you some additional details, especially about that. Some companies are in a tough spot. These companies need attention. Yesterday, we discussed CES industry developments, what Jensen Huang said about the 3 main pillars. These coolers offer opportunities, but also negative impacts impacting industries. Today, I'll also offer analysis on that. Wow, bananas smell good. Ah, the scent of bananas. It's been a while. Good evening, banana scent. Hey, Emily, good evening. It's been a while. All right, let's start. First, let's look at economic data. At 9:15, the U.S. December ADP report, the mini non-farm payrolls, will be released. The previous figure decreased by 32,000, indicating recession. So what's the forecast? It's expected to rebound, increasing by 447,000. So at 9:15, we'll take a look together to see whether this data is more positive or negative. Overall, if this data is... As long as there's no decline, and especially if it's above 47,000, that means the overall job market is still stable and not heading toward massive layoffs or a big wave of unemployment. Of course, as long as the economic data stays like this, and as long as the employment numbers perform well. As long as the employment numbers are strong, the market might think that there's no rush to cut interest rates in January, relatively speaking. But looking at it from another angle, if unemployment isn't as bad as people imagine and the job market holds up, it also means that the US economy isn't heading toward a recession. At most, the market might cool down, but it's unlikely we'll see massive layoffs. So this is really a double-edged set of data. So at 9:40, let's take a look at the ADP numbers and see how the actual release compares to expectations and the previous figures. Also, at 11 o'clock tonight, there's the US ISM non-manufacturing PMI for December, the Purchasing Managers Index, which is quite a significant indicator. The previous value was 52.6, and the expected value was 52.3. Looking at this data overall, since it's for the service sector, the non-manufacturing sector, it's actually a bit more important than manufacturing, at least for the US. As for this data, as long as it stays above 50, since we say that for the PMI, below 50 indicates contraction, and above 50 means the economy is more in an expansion phase. So as long as this number stays above 50, things are looking good. Even if it's very close to the previous value of around 52, or about the same as the expected value, that means the economy isn't heading toward a recession. So this won't have too much of an impact on the stock market either. That's why at 11 p.m., you can just keep an eye on the ISM non-manufacturing index. The expected and previous values are both around 52.3 to 52.6. Also at 11 p.m., there's the JOLTS job openings data for November. The previous value was 7.67 million, and the expected value is 7.6 million. Honestly, the number of job openings doesn't have much impact and doesn't change much, so this data isn't a big deal. Take a neutral view of these two. Also, at 11 p.m., there's the factory orders month-over-month data for October. This data is a bit outdated since it's for October, and the previous value was 0.2, while the forecast is a drop to minus 1.2. As for this data, well, let's just say, in terms of importance, it's just not as important as the previous data points. So at 9:15 p.m. tonight, when we're still before the market opens, let's first take a look at the ADP data. Then at 11 p.m., you might as well just focus on the non-manufacturing PMI and the JOLTS job openings. That's enough, really, that's enough. So I've provided you with the relevant data and expected values. All right, as for the officials' remarks, of course, someone asked whether it's a good or bad sign when the Taiwan stock market sees a surge in trading volume. Right, we actually mentioned this right at the very beginning. If there's a spike in volume at high levels, you definitely need to be a bit cautious because it means someone is dumping their shares. But even though today's trading volume was quite high, it was only a slight drop, not the huge volume followed by a big plunge of 500 or 600 points. I think it's still okay. The market isn't out of control yet. In my view, the Taiwan stock market's trading activity today hasn't reached a chaotic state. When you see new highs in volume, that often comes with and will continue to come with new highs in price as well. If a new high does appear when you see a new high, if you're holding long positions, etc., it's best to take some profits first. Wait for a pullback. When volume shrinks and price returns to the moving average, that's when you can look to re-enter and find a new buying opportunity. This is a safer approach for the current market. I'm also taking this chance to answer a question from Amy Lee, or rather Emily. All right, and then there's Milan Lissi. He mentioned that Miss Milan, who's pretty close with Trump and is considered one of the more dovish committee members, said that the current monetary policy is restrictive and is holding back economic growth. So she believes that this year, in 2026, there should be a rate cut of 100 basis points. That is a 1% rate cut. As for whether her viewpoint will have a significant influence or cause a stir within the Federal Reserve, whether in January, March, May, June, or later in the year, we'll just have to keep watching and see. Anyway, everyone should keep in mind that Mester is basically someone who follows Trump's line of thinking. He just keeps pushing for rate cuts. So whether he's talking about cutting rates by 0.25%, 0.75%, or even 1.25%, it doesn't matter. The point is, he's a dovish member. So in every voting process, because of that, Lee C has permanent voting rights, right? He's in that Lee C position. And since he has permanent voting rights, as long as he's in office, he'll basically carry out Trump's will. In other words, every time there's a vote, he'll support it, always pushing for a half-point rate cut each time. That's pretty much how it goes. As for this argument, it hasn't changed so far. Now, when it comes to more important things, we need to pay a bit more attention. Trump said, as we all know, there will be midterm elections this November. I'm not sure if it's November 9th or 3rd. If I remember correctly, it's November 9th. He said that if the midterm elections fail this time, he might face the risk of impeachment. And impeachment would be a bigger problem, because if he gets impeached, if the impeachment succeeds, then there will be a lot of things he won't be able to do, and he might even have to face being removed, prosecuted, and so on. A lot of things could get really complicated. So he said if in the midterm elections, whether in the House of Representatives or the Senate, the Republican Party doesn't have the majority, then a lot of policies might become very difficult to implement. For example, right now, the Republicans in the House of Representatives only have 218 seats, just barely 5 more than the Democrats. As for the Senate, the Republicans have 50 seats compared to the Democrats' 45 seats. It doesn't seem like a big difference. So in fact, as long as this November, at the end of this year, when the House and Senate are up for re-election, if either chamber, whether it's the House or the Senate, if in any one of them the Republicans don't hold the majority, then a lot of bills or policies will run into conflicts, or simply become difficult to implement. This would make it hard for Trump to carry out things like tax cuts. Imposing tariffs, engaging in trade wars, or handling international diplomatic affairs will all be restricted. Everyone should pay attention. As for Trump, I think he'll be under more pressure, because he believes if midterm elections don't go well, many things he simply can't push forward or carry out. All right, another thing everyone should note is January 9th. On January 9th, this week, didn't we say that the Supreme Court is going to rule on whether Trump's tariffs are actually legal or not? Whether they comply with the law or not? If they do comply, then of course the tariffs will continue to be imposed. But if they don't comply, then how should the court rule? Should they allow the tariffs to continue for another 3 months or 2 months? Or should they immediately, on that very day, declare all the tariffs invalid and require that all the tariffs collected be refunded to all the countries and companies involved? Right now, nobody knows. All right, so at the moment, nobody knows. But just remember one thing. If on January 5th, let's say hypothetically, the Supreme Court announces that Trump's tariff war is legal and can continue to be enforced, don't be too surprised. Why? Because it's already being enforced right now. The tariffs on various products from different countries are already ongoing. So if the Supreme Court announces on January 5th that Trump's actions are legal, it just means that things will keep going as they are. So things will keep going, meaning every country will impose the same tariffs as before. Whether 15, 28, or 5%, they'll keep it up. Whether semiconductors, lumber, or other products, tariffs set before will stay the same. Honestly, the impact isn't big. In the short term, the market index might fluctuate, and people might worry that if tariffs continue, inflation will spike and the economy will face problems. But that's not necessarily the case. Why is that? Because tariffs are already in place now, so continuing them is actually fine. Besides that, there's something even better. Just like we mentioned earlier, there's an election coming up this November, right? Don't forget, everyone, starting from last February, March, and April, Trump kept talking about the tariff war, right? And after he imposed comprehensive reciprocal tariffs, did you notice that from April through to last December, there were a lot of developments in between? Most countries' tariffs are generally kept between 15% and 20%, or 15% to 5%. A small number of countries have higher tariffs imposed, like Brazil, which might get hit with up to 50%, and India, among others. Their tariffs are set higher. These have been negotiated one after another. But for Asian countries in similar cases, like Taiwan, Japan, and South Korea, the tariffs are mostly in the 15% to 20% range, and so far there haven't been any major changes. Why haven't there been any major changes? That's because they have to face elections. So you'll notice that, in fact, starting from the end of last year, many of Trump's original tariff policies were postponed. For example, regarding trade policy with China, last year he said he would impose tariffs of 125%, kept saying he'd hit them hard, but in the end he kept lowering it, dropping it to 30 or 40%, and kept reducing it until finally he told you. The entire tariff war, the tariffs on China, would be postponed for a year before being implemented. So why postpone it for a year? We've talked about this before. Why delay it for a year? Because there's an election next year. So you can imagine, for the sake of the election, for the sake of votes, in order for the Republican Party to gain a majority in both the House and the Senate, and for Trump to continue implementing his policies. So regarding the tariff war, in fact, Trump has been backing down again and again, constantly giving in to the point where, look, his biggest competitor, his biggest trade rival, China, can actually say to him, let's fight again in a year. For now, let's suspend all tariffs. A year later, in 2027, we'll deal with it again. So you can imagine, even if on January 9th, the Supreme Court really rules that Trump's tariffs are legal and can be enforced. So do you think Trump will really go all out and keep imposing tariffs nonstop? Actually, not necessarily, because last year when he could have imposed them, he was already holding back. Why? Because there's an election this year. On the other hand, if on January 9th they announce that there's no need to impose tariffs, the tariffs can't be imposed. This is generally positive. Whether it's for businesses or for different countries, their costs would go down. However, even with positive outlooks, consider this. An upturn doesn't guarantee perfection, widespread celebration, or soaring markets, as if no crisis exists. That's untrue. Don't forget this, okay? Last year, U.S. Treasury Secretary Janet Yellen, as well as Trump, both mentioned to everyone that even if the Supreme Court rules that Trump's tariffs are illegal, they can still use other provisions like Section 232, Section 301, and other clauses. They still have channels to impose tariffs, just finding ways to balance things out. In other words, it's simple. On January 5th, pay attention. Not only do we need to watch the non-farm unemployment rate, but also on January 9th. On January 9th, besides watching the non-farm unemployment rate, which is this Friday, there's also the Supreme Court ruling. If the court rules the tariffs are illegal, that's a positive. But don't get overly optimistic about the good news, because, as I just mentioned, there are supporting measures in place. Trump still has tools he can use. If the ruling is that it's legal, you also shouldn't be overly pessimistic. Don't immediately think, oh, if the tariffs stay, will inflation go up and the economy take a hit? No, because these measures were already in place last year. All right, so last year these measures were already in place and Trump kept missing the mark. So once you figure out these two directions, whether the tariffs or the makeup measures are legal or not, if you have a clear idea in your mind, you will basically know what objective perspective to use to look at the current market. It's not like on January 9th you suddenly hear, wow, the tariffs are in place and get scared out of your mind. Or if they're not in place and then by Friday still nothing has happened. That's not really how it works. It's a more balanced kind of operating strategy, okay? So I'm just explaining this to everyone because the most important thing is that at the end of this year, there will be, what's it called again? Elections. Always remember, elections cure all problems, okay? Really, really remember that. Elections cure all problems, okay? Is boys good evening? Is boys good evening? And then what is this? Edison Man, right? Edison Man asked, why has TSMC been like this these past few days? It's going up, but foreign investors are pulling out. On the other hand, why are foreign investors leaving, huh? Let me tell you all, TSMC is basically the protector of our nation. It's our national treasure. As for foreign investors, basically sometimes they buy in, sometimes they sell out. So you shouldn't just look at a single day. It's best to look at the overall trend. Foreign investors use futures to hedge or for arbitrage. When they buy a stock like TSMC, they might keep buying all the way up. So don't get too caught up in the short term, just 2 or 3 days, because it's hitting new highs. TSMC has been hitting new highs, going above 1,700 new Taiwan dollars. So foreign investors definitely want to sell at some point. Foreign investors' holdings in TSMC shouldn't exceed 50%. They've bought a ton, and when TSMC hits new highs, it's reasonable for them to sell a few hundred million, or tens of thousands of shares. That's all fine, but don't forget that. Why recommend selling? Noticed? The stock index isn't dropping. Another big player, the National Stabilization Fund, it hasn't exited. I don't know why they haven't pulled out. Even past 30,000 points, they're still in. There might be something else secretly to support the market we don't know. When you look at these institutional investors, the main players, the National Stabilization Fund, and foreign investors, don't focus on a single day. They have many strategies and logic. It's not just about them making changes in a day or two. So to answer Edison May's question regarding foreign investors and their short-term moves or changes, there's really no need to worry too much. Actually, TSMC's fundamentals are still solid. As long as the fundamentals remain strong, TSMC will continue to play its role as the guardian mountain for Taiwan's stock market. We've talked about its EPS before, so if you work out its P/E ratio, you can pretty much estimate its target price. We discussed this a couple of days ago, so I won't spend more time on it today, since there are a lot of other things to cover. But just remember the EPS, this year, last year, and roughly for 2025. The estimate is roughly 67 to 70 new Taiwan dollars or so. This year, the market is estimating the EPS to be about 77 to 80, 77 to 80. So it's simple. If you multiply that by a PE ratio of 20, 22, or 25 times, you can pretty much figure out what TSMC's estimated price might be this year and where it's likely to end up. So when you see foreign investors sometimes buying one day and selling the next, or if you look at the current index level, you can pretty much get a sense of whether you should be on the buying or selling side. Just do a quick calculation and you'll have a general idea. Because of regulations, for example, there are things we can't discuss directly on the program. It's tough to tell everyone how high or low it will go. We can't. Perhaps at a seminar, or if we meet, I can detail the calculations. The US 10-year Treasury yield reached 4.15, interest rate at 3.04. Expected rate cuts remain at 2 to 2.4. This year, we anticipate one rate cut in the first half and one in the second. No change. The US dollar index edged up 0.09%. It rebounded from 98 to 99 recently, but monthly and 200-day moving averages hold steady. They're still acting as strong resistance. So in the short term, under the premise that Trump wants to cut rates and monetary policy is leaning more dovish, the US dollar index is likely to remain in a relatively weak and volatile state. That's the situation for the dollar. All right, now about the geopolitical risks. Let me add a bit here about China. So China said because Japan has made some pretty harsh remarks. And when China talks about harsh remarks and actions, they're referring to what happened a while back. Wasn't it last year? What's his name? Their prime minister. What's the name of their prime minister? Tsunai Takaichi, that's her name. So what did she say? She said something like, if something happens to Taiwan, it's the same as something happening to Japan. So of course, China wasn't happy about that. There were some political considerations. And since Tsunai Takaichi wasn't going to take back what she said, China started to take action, like closing consulates and implementing a lot of different measures. Then China also said that they might consider tightening exports of various rare earths to Japan. And today, an even tougher strategy came out. They said they would ban all exports of dual-use items, dual-use goods. So what does dual-use mean? What are dual-use items? Dual use refers to things that can be used for both civilian and military purposes. So anything that has both civilian and military applications. Anything related to both civilian and military uses, as long as it's connected to the military or could potentially be developed for military, defense, nuclear energy, and so on, some highly technical items, all of these will be regulated. The control list has over 1,000 items. So what's the answer? Of course, things like rare earths, chemicals, drones, telecommunications, alloys, nuclear energy, these have a huge impact, a very wide scope, especially when it comes to rare earths. If drones, rare earths, and these chemicals are all controlled, then for Japan, in terms of developing things like electric vehicles, especially the permanent magnet motors and drive motors, it would be a big deal. Basically, it would be pretty difficult because when it comes to electric vehicles in Japan, almost 100% of the drive motors rely on rare earths from China, so the impact is really, really significant. Also, Nomura Research Institute in Japan mentioned that if there are restrictions on rare earths, since China is unhappy with Japan's recent statements, they are considering tightening restrictions on rare earth exports to Japan. They said that if rare earth exports are restricted for 3 months, Japan could lose 660 billion yen in just 3 months, and its GDP would drop by 0.1%. If the restriction lasts for a whole year and no rare earths are exported to Japan, it could result in a loss of 2.6 trillion yen and a 0.43% drop in GDP. All right, here comes the key point. If China really does this, China is actually preparing to do it, what about Japan's protests? Japan is protesting now, but are those protests effective? No, they're not. Why? Because think about it. Back when the US and China were in a trade war, China used this tactic. China used rare earths to choke whom? The United States, because the US can't do without rare earths. So by grabbing hold of this, what do we say? Strike the snake at its 7 inches, right? Strike the snake at its vital spot. And what is that vital spot? It's rare earths. Rare earths are essential for many high-tech industries, the aerospace industry, and also things like electric vehicles, generators, and many other products that all require rare earths. And when it comes to rare earth elements, China just happens to be the largest exporter, with the highest reserves as well. So a lot of countries have to pay attention to China. So when the trade war really broke out, just like last year, when the trade war happened, China directly used the rare earth war to pressure the United States. So what did the US do? They went for the eggs, targeting the tech sector. They started allowing chip exports again, slowly easing restrictions until none remained. Now, if the US goes for the eggs, wouldn't Japan follow suit? It's even less likely they wouldn't. So when it really comes to using rare earths as a weapon, when it comes to using rare earths as a strategic tool in negotiations, I don't think Japan would be able to say no. Honestly, they probably can't refuse. So let's keep an eye on this situation. If Japan really does say no, it could have a huge impact on their economy and industries. So Japanese stocks would likely fall. Be careful and pay close attention. But if Japan backs down, if they give in, the US and China can slowly negotiate and work things out. That's the first thing. Secondly, regarding this, as for the UK, France, and Ukraine, this issue isn't that important right now. It's just about signing some memorandum of understanding, making statements about a ceasefire between Russia and Ukraine, and so on. After a ceasefire, they might send troops to Ukraine, and the US would provide intelligence and other support, like logistics. But all of this is just talk for now, because there hasn't even been a ceasefire yet. Nothing is set in stone. We can wait until there's actually a ceasefire to see what happens. There's still plenty of time. Now, what I want to add today is about what's stirring things up, which is what exactly is going on with Greenland. But before we talk about Greenland, let's first discuss something else, the ADP employment report that was just released at 9:15. All right, the data was just released, so don't forget about it. The ADP report, this data that came out at 9:15 just now, shows an increase of 41,000 jobs. That's 41,000, which is a complete turnaround from last month's decline of 32,000 jobs. So from last month's contraction to this month's increase. Although it's about 6,000 less than expected, it's still pretty good. At least it's around 40,000. So overall, for today's ADP report, we can only say it performed better than last month. Better than last month, but did it meet expectations? No, but it's not that far off either. So our overall interpretation of the job market is that the employment situation is relatively stable. At most, it's just a slight cooling off, but there's no sign of a significant downturn. And because today's data shows a rebound from last month's decline, the market atmosphere, of course, will have some people interpreting it as, hey, maybe the job market isn't as bad as we thought. So does this mean the Federal Reserve isn't rushing to cut rates? Because if they're not rushing to cut rates, especially in January, then for the stock market, today's reaction to the ADP report might be unfavorable for US stocks. But again, this is short term. It might be negative for US stocks. But how long will that reaction last? I don't think it will last very long, and it won't be too significant or drawn out. Maybe it'll just happen right at the market open, or even just a bit of volatility in the futures market, and then it's over. Why is that? This week, this Friday is even more important. This Friday is when the official non-farm payroll data and the unemployment rate are released, and I think it's the latest data for December. Also, on January 9th, which is this Friday as we just mentioned, the Supreme Court will also rule on whether Trump's tariffs are legal or not. So the most crucial data, news, and events will all fall on this Friday. In contrast, today's ADP, even though it came in below expectations, but it was still better than last month's performance. I think the market's interpretation is just a short-term reaction. It doesn't really have a big impact or pull on the overall US stock market today. Not much at all. So just take a look and move on. But I just wanted to tell everyone that at least, the job market is relatively mild and steady, but it hasn't shown any major surges, nor is it heading toward a significant recession. All right, tonight at the market, there are also some indicators, and later tonight there are more. The US is scrambling for food, and China is scrambling for silver. All right, okay, some people are saying that the war in Ukraine might not end, that it won't stop. Honestly, I don't know if it will end or not, because they've been talking about it for so long. Over 3 years of arguing and fighting, and even now it's still a tangled mess that can't be sorted out. Anyway, I still can't quite figure this out. And as for things being tangled and hard to unravel, let's take a look at this whole geopolitical risk situation. Yesterday, we talked about the pizza index suddenly spiking, right? Nobody really knew what was going on. Was it Colombia, Iran, or maybe Cuba? Well, today, some news came out about Greenland. This Greenland situation really stirred things up and made tensions rise. Why do I say that? Let me explain. So, Trump. Today, we're going to talk about this Greenland thing. Greenland, let's just give a quick introduction to this place. Greenland is actually the world's largest island, the biggest one there is. It's pretty much covered in ice all year round, and it's located close to the Arctic, near the Arctic Ocean. So what's up with that place? Well, it has rare earth resources, and its geographic location is pretty unique. It's got strategic value. For example, a lot of warships and ships from different countries pass through the Arctic Ocean. Or if missiles are launched over that area, who's nearby? And then there's Russia nearby. So this place's geographic position is quite special. Plus, it has reserves of rare earth elements. That's why the United States has always wanted to claim Greenland as its own. Today, they're even specifically talking about using military means to advance and take over Greenland. Trump said that's one possible way too. So why do we say that this is like a sudden spring in the dry riverbed for Africa? What does Greenland have to do with it? It reminds me of something else. Do you all know where the phrase "a sudden spring in the dry riverbed" comes from? Do you know its origin? Let me briefly talk about it, because when I was reading this article today, this phrase suddenly came to mind. Actually, do you all know, during the 5 Dynasties and 10 Kingdoms period, what era was that? It was after the fall of the Tang Dynasty, when China started to split apart, with warlords dividing up the land. Each of these warlords controlled their own territory, which led to the period known as the 5 Dynasties and 10 Kingdoms. The 5 Dynasties refers to Liang, Tang, Jin, Han, and Zhou, those 5 dynasties. As for the 10 Kingdoms, after the 5 Dynasties period ended, among the 10 Kingdoms there was a state called Southern Tang. In Southern Tang, there was once a prime minister, who was also a very famous lyricist. He wrote lyrics and poetry. His name was Feng Yanxi. If you have time, you can look him up. Feng Yanxi later became the prime minister of Southern Tang. He once wrote a very famous lyric called Ye Jinmen. It starts with something like "the wind rises." So the line goes, "The wind suddenly rises and stirs the spring water." What does this mean? Originally, the water in the pond was calm and unremarkable, completely still and peaceful. But when the spring breeze blows over it, ripples start to appear, spreading out across the surface. What does this represent? It means that originally, in this place called Southern Tang, everything was peaceful and uneventful. If you have time, go take a look at that poem. I think it's really well written. Feng Yanxi, that's the poet's name, he wrote this poem. He says it's just like Greenland. Originally, nothing ever happened there. It's just an island that's almost permanently frozen. Originally, in much of the world, no one really noticed it. But every time Trump brought it up, talking about its strategic position or about rare earth resources, it turned into Greenland again, resurfacing and coming back into the spotlight. Alright, so we just talked about how Greenland has a special strategic position, and it also has significant reserves of rare earth elements. That's why the United States has always wanted to take control of it. Now, when the US says it wants to take over Greenland, of course it claims there are international security concerns, national security considerations, things like the Arctic Ocean, and issues related to Russia. Now, here's the key point. In the end, can the United States really make Greenland its own? I think the main issue isn't in Europe. It comes down to just 2 places. One is Denmark itself, and the other is the people of Greenland making their own decision, maybe even through a referendum. Because Greenland, as for Denmark, it's basically, well, let's say Denmark, it's considered an autonomous region, right? It's an autonomous region under Denmark, and Denmark can provide things like national defense and so on to support it. But Greenland itself has the right to self-government. So when Trump says today that he wants to use military force to take Greenland, that's what this is about. Right after Denmark was mentioned, several European countries like the UK, France, Germany, Italy, Spain, and Poland all said that if Greenland were really to be incorporated, to be made part of someone, if it were to become part of the United States, then only Denmark could make that decision. Greenland and Denmark themselves have the right to decide, not the United States just saying it wants it and that's that, or the US sending troops whenever it wants. Why is that? There's really no need to worry about the US sending troops. Basically, the US wouldn't go so far as to send troops to take Greenland. Why? Because Denmark and the US are both NATO allies, so it's basically unthinkable for allies to fight each other. It would be really strange. I'm your ally and then I attack you? That doesn't make sense. And if you attack your own ally, then wouldn't all the other NATO countries have to get involved too? So who would everyone help? Would they help Denmark or the United States? It's a real headache. That's why the US National Security Advisor, Stephen Miller, also said that basically there's no need to use force to acquire Greenland. Why? Because if the US really did use force to take Greenland, do you think Denmark would send troops? Would Denmark go to war with the US? Basically, no. Denmark would never go to war with the US over an autonomous region like Greenland. That's just obviously impossible. Plus, the US is a core member of NATO. So if the US claims it's to ensure Arctic security and defend NATO's interests, then in theory, Greenland could have a chance to become part of the United States. But whether that actually happens depends on what Denmark and Greenland themselves want. Whether it's through negotiation or by purchasing it, whatever the method, it all comes down to the same thing. I think it's something that can be discussed, but basically this whole Greenland issue is just being brought up again. Actually, last year it was hyped up and talked about again, and now it's being brought up once more. So everyone just sees it as a story to watch. Because I think this Greenland thing will drag on for a long time, and it's not likely to quickly turn into a so-called geopolitical risk. Honestly, the US is unlikely to go all out just for Greenland. It's pretty much impossible for the US to go to war with Denmark. It's just not going to happen. Almost impossible. So of course, the price of crude oil won't see any fluctuations or be affected by this at all. That's why today, crude oil continued to fall, dropping by 1.19%. Overall, it's still looking pretty weak. Some people are saying things like turning Denmark into a colony or whatever. I really don't know. We'll just have to see what they end up doing. Okay, as for Li Hozhu, that's another story. Southern Tang, later Tang, you know, Li Hozhu. He wrote some poetry that's actually pretty famous. If you have time, you can go check it out. I remember Li Hozhu. Zihang just mentioned him, right? Li Hozhu wrote a poem, right? That poem, that famous one. What was it called? Anyway, after he finished writing it, well, he ended up being captured by, who was it, from the Song Dynasty? I don't know if it was Zhao Guangying or someone else. He was executed, basically forced to commit suicide, because they realized he still seemed to long for, to reminisce about the life he had during the Southern Tang, so he was eliminated. So if you have time, you can look this up in history or Chinese literature. Anyway, there are a lot of these stories. If I have time, I'll share more with everyone. As for the economic data, since Zihang just asked about it, let me talk about that. Of course, the ADP report was released earlier tonight. It was slightly below expectations, but higher than the previous value, higher than the previous figure. At 11 p.m. tonight, keep an eye on the JOLTS job openings. Tomorrow, there will be data on US travel numbers and the talk by Bowman. This Friday is especially important. We'll have the unemployment rate, the monthly average hourly earnings, and the non-farm payroll numbers, which are all things we really need to pay close attention to. As for the industry side of things, it's a case of some are happy, some are worried, just like Jensen Huang. Yesterday, we spent some time talking about the 3 major new products he introduced at CES. If you missed it, you can check out yesterday's replay. There are 3 main projects, including the AI-focused 2016 Rubin series GPU. This is really important. In the future, it's all about better performance and efficiency, along with a comprehensive upgrade of the AI market. Then there's also robotics, the physical AI aspect. They're making moves in robotics, and they're also planning to enter the autonomous driving sector. Speaking of entering that field, Jensen Huang, yesterday he added something else. He said that right now, the storage and access market, it's basically a market that hasn't been fully served yet. And in the future, it could become the biggest market in the world. Why? Because all AI operations need memory, whether it's high bandwidth memory like HBM or things like that. Double DR5 and so on, all of these. All these foundational technologies are needed because the faster the performance, the quicker the response has to be. In fact, Jensen Huang even turned to a company called GROQ, asking them for excellent inference capabilities. The inference personnel need to be excellent, so it's not just about relying on HBM. You might also need things like SRAM. SRAM, which in Chinese is called static random access memory, reacts even faster. That's LSRAM. So looking at the whole picture, whether it's SRAM, HBM, or even things like DRAM and NAND flash, the demand for all of them is huge. Because the demand is so high, that's what makes it possible to improve the overall AI performance, whether it's in inference or training capabilities. So related companies include, for example, yesterday a classmate asked me about Micron, Western Digital, WDC, or Seagate, those hard drive companies, and so on. These 4 companies, STX2, can all be used as references. Let me briefly mention Western Digital and SanDisk, also known as WD. The stock ticker is WDC. Yesterday it surged 16.77%, and SanDisk also jumped 27%. These 2 stocks, including Micron, have all been on a strong upward trend, moving forward because as long as there is demand for memory chips are strong, then all these memory companies like those making disks, companies like Netflix, NAND Flash, whatever, they're all going up. Taiwanese companies too, as long as they're even remotely related, whether it's DDR, DDR5, whatever, or if you're making NAND Flash, NOR Flash, or any flash-related modules. It's all the same. Companies like Adata, Team Group, Winbond, Nanya Technology, even Macronics, all of them have skyrocketed. Even the niche memory companies are seeing their prices go up. You can imagine that with this wave led by AI, starting from last year, it went from cooling systems, then to power supply, then to server-related architectures, and so on. Lots of GPUs, CPUs, water cooling, and many other things. By the end of last year and the beginning of this year, memory-related stocks started getting hyped up. As for what's next, there will definitely be more, possibly including passive components, packaging and testing, advanced processes, and so on. There's going to be a lot of buzz around all these things. So if you have shares in any of these related companies, you can continue to hold on to them for now, because this overall wave hasn't ended yet. It's still ongoing. So for these memory companies we just mentioned, like Micron, SanDisk, Western Digital, and so on, they're still more on the bullish side. Let me add more, but if it's something that's showing more weakness, which two companies might be at risk? You need to pay a bit more attention to these two. In my opinion, they've kind of become partners in misfortune, and they're also among the so-called Magnificent Seven. These two good friends are Apple and Tesla. Why has Tesla become a partner in misfortune? Because Nvidia at CES yesterday was supposed to unveil its Apple model, this AI model, right? The idea is to make autonomous driving systems think more like humans, using AI to develop self-driving FSD systems. So what about Jensen Huang? What he's thinking is through AI operations, AI thinking, AI vision, and AI performance, he wants to enable every car manufacturer, whether you're Mercedes, BMW, General Motors, Ford, or any other company, to benefit. You can all use this El Pomelo system that I've developed to build your own autonomous driving systems. In other words, any company that uses my system can develop their own self-driving cars. All right, so he suddenly wants to say that including companies like Tesla and Google's Waymo, their autonomous driving systems are already very advanced. But what Nvidia wants to do is not just empower Tesla and Waymo, but also enable all these other companies to build their own systems. Of course, to some extent, this will pose a threat to Tesla's long-developed FSD autonomous driving system, because after all, Tesla has spent many years, so many years, and collected a lot of data. In fact, the data used by these drivers, the big data from their driving, is used to build the FSD system. So when this answer comes out, it really feels like it's directly going up against Tesla. So to some extent, this is a key factor for Tesla's long-term growth. It could become a threat. It could pose a threat, but listen carefully. What I just mentioned is a factor for long-term growth. In other words, it might not have much impact in the short term, because the system from Tweeta has just come out. So will it immediately knock Tesla out? Not necessarily, because there are still a lot of other factors at play. Whether it's regulations, operational status, or the feasibility and efficiency after it goes live in the future. Right now, nobody knows. No one knows how effective it will be. Nobody has any idea. So we can only say that in the short term, people might think, wow, there will be big fluctuations, and the impact will be significant. But in the long run, at least for now, it doesn't seem to have a huge impact yet. However, if this WIDA system is really tried out by several companies and it works well, then indeed, in the long run, it could pose a threat to Tesla. But as for the short-term volatility, I think you should just treat it as news-driven movement. As for whether there will be a long-term impact, like I just said, we'll have to see how things play out in the future and compare to know which side is stronger, but it won't happen that quickly. It really won't. Even Musk himself said that it might take another 5 to 6 years before there's any real pressure on Tesla. Now, whether it's 5 years, 6 years, after 6 years, or even before 5 years, maybe in just a year or two, this threat could emerge. Nobody knows. To answer the question, among his 3 main products, one relates to robots and self-driving cars. This will inevitably overlap or step on Tesla's industrial development. We need to keep an eye on this. Tesla's stock price has been a bit weak in the short term lately. Among the big tech giants, its performance has also been one of the main reasons dragging down the Magnificent Seven index. And as it happens, I remember yesterday there was a student named Flower, right? Oh, Flower asked about Tesla's stock price situation, right? Yes, Tony61767, that's right, that's the poppy flower. I just couldn't remember what exactly Li Yu, the last ruler of Southern Tang, wrote. When will the spring flowers and autumn moon end? How much do we know of the past? Yes, that's the poem. Last night the east wind blew again. I can't bear to look back at my old country in the bright moonlight. So after writing and writing like that, next time it's done box by box. That poem is so famous because he kept talking about his old country. I can't bear to look back at my homeland in the bright moonlight. As soon as he finished reciting it, the emperor of the Song dynasty had him dealt with because he thought, you're still longing for your old country. You're still longing for your old country. So that poem was said to be the last one he wrote in his life, his very last one. All right, as for Tesla, it continued to drop yesterday by another 4.14%. We've talked about this before, this neckline area right here. Previously, it managed to break above, but in the short term, it fell back below again. After dropping back, it means the pullback pressure is relatively high. If it has a chance to climb back above, of course, its subsequent performance would be better, and there's still a chance to hit new highs. But the prerequisite is that it needs to get above this blue moving average line and the neckline on the south side. Right now, the weakness is mainly because including Tesla's fourth quarter delivery and shipment numbers, they both fell short of expectations, well below expectations. Plus, NVIDIA's self-driving car system is starting to compete with Tesla. So in this area, you can see that yesterday after the quarterly moving average was broken, the short-term break below the quarterly moving average means the pullback pressure is indeed quite significant. The pullback pressure is pretty big. But if you ask whether, in the long run, Tesla will just keep going downhill, keep dropping all the way until it breaks below the 200-day moving average, right now, it's not that pessimistic, not that bad, because as I just mentioned, he responded that the system has just come out. As for NVIDIA making such a splash, will Tesla come up with something new to counter it? We really don't know. Also, as we just mentioned, Tesla itself, Elon Musk actually has a lot of side businesses. SpaceX, FSD, and many other things all add to his strengths. Also, from another angle, is it possible that one day Tesla might actually end up cooperating with NVIDIA? It's possible, right? That could make their FSD autonomous driving even more user-friendly and help AI develop even further. Then, whether it's human driving, car driving, or AI driving, everything could become more efficient. Maybe one day Tesla will actually work with NVIDIA. It's not impossible, you know? Why? Because under Musk, Musk himself, has invested in a company called xAI. It's dedicated to AI development, Hyatt. Because the app is basically Grok, right? That Grok AI platform. xAI just made an announcement today. Previously, they had a $20 billion fundraising round. And guess who invested? NVIDIA invested. As for how much they invested, nobody really knows. Some say it's around $2 billion. But regardless of the amount, the point is NVIDIA invested. So this is Musk's xAI, and NVIDIA has invested in Musk's AI company. That means in the future, there's a possibility they could work closely together in AI development, whether it's strategic cooperation or some kind of industry partnership. We don't know yet. And maybe this kind of collaboration in AI could eventually extend to working together on Tesla's FSD, making it even more accurate. Is it possible to further reduce the accident rate or incident rate? It's possible. So right now, it might seem like NVIDIA is stepping on Tesla's toes when it comes to robots and FSD. But in the future, it's not out of the question that the two could end up working together. If they do end up working together, that would be another huge story with a lot of potential for speculation. So just keep this information in mind. Anyway, I don't think Musk is the type to give up easily. His personality just isn't like that. He'll probably come up with a lot of different strategies. Alright, so another thing is Apple. We just mentioned that all kinds of memory, like HBM memory and fast memory, are all going up in price. Prices have been rising for 3 days straight, and by a lot, plus there's a shortage. There's a shortage because, as we mentioned yesterday, a lot of companies like Micron, SK Hynix, and Samsung are all developing more advanced HBM, like HBM3, HBM4, high-frequency memory, and even more advanced things like DDR5. So this has squeezed their original production capacity. Everyone is moving toward developing high-end products. The lower end or more general consumer electronics, automotive electronics, and consumer demand, those 3C products that used to use lower-end memory, they're saying they're not making those anymore. They shifted all their production capacity over. So with much less capacity available, these more general consumer electronics are now facing shortages. And when there's a shortage, prices go up. As long as there's a shortage, prices will rise. So why do shortages lead to price increases? You see companies like Winbond, Nanya, Niche Tech, and PowerChip, all of them are raising prices, and that's exactly why. Because of these price hikes, when Apple goes to buy things like Netflix or other fast memory chips, the prices will go up as well. Fortunately, as Tim Cook and Luca Maestri said, Apple has ensured these Netflix-related memory chips can be supplied through Q1 this year. So far, no shortages, but significant price increase pressure, about a 50% hike or upward pressure. Additionally, they mentioned TSMC. They were able to negotiate a more favorable quote with TSMC. This is according to Morgan Stanley's own investigation. They said that the next generation of TSMC chips will not use the 2nm process yet. TSMC hasn't started mass production, but this year they will be able to mass produce a lot of chips using the 2nm process, which will be used in Apple's future A20 chips. That means the iPhone 18 or maybe the iPhone 12 could use the A20 chip. This chip will cost about 30% more than last year's A19 chip used in the iPhone 17. 30% more. 30% more. Is that a lot? Well, originally, the market estimated it could be twice as much. Some people even predicted an increase of 250%, saying that TSMC's 2nm process would make the cost extremely high, really high. So it could push Apple's costs up by more than 250%. But right now, it doesn't look like that's the case. So he said that maybe the A20 chip will only cost up to 30% more than last year's A19 chip. So the price increase isn't as much as people imagined. That's because they negotiated a better price. So in this case, to some extent, for Apple, this might serve as a bit of reassurance amid all the hype about price increases and supply shortages. That's basically the situation. But it's worth mentioning that Apple's stock price has also been quite volatile these past few days. If you look at the market recently, both Apple and Tesla have been dropping. Apple stock is in a tougher spot because it has fallen below the 50-day moving average, and the 20-day moving average is also starting to turn downward. In other words, in the short term, Apple is under a lot of pressure in this market area. The pressure on Apple will be quite significant, and it may need some time to consolidate and fluctuate before it can recover, since it has already broken below the quarterly moving average. As for when it will climb back up or when it will start to rebound, you'll just have to keep an eye on it. If you already have Apple stock in your hands, just wait for a rebound. If it rises back to the quarterly moving average or the downward sloping monthly moving average, you might want to reduce your position a bit. Of course, the iPhone 17 craze has been selling well, but as for what kind of buzz or highlights there'll be this year, I think it all depends on what Apple does next. Because right now, what we can see is that memory prices are going up, and TSMC's 2nm prices are also rising. With these price increases, whether this will gradually impact Apple's related revenue and profit growth in 2026 is something we need to pay special attention to. At least from a technical perspective, Apple has already fallen below the quarterly moving average for 3 consecutive days, so it's looking a bit weak in the short term. Just keep an eye on it and monitor the situation closely. Let me quickly add a bit more about Apple and Tesla. Now, regarding US stocks that are rising or falling in pre-market trading, some people say that the increased costs will just be passed on to consumers. Of course, passing on costs is one way to handle it, but there are limits to how much you can pass on. If Apple can't pass on all the increased costs, then they'll have to absorb them themselves. If Apple has to absorb the costs themselves, then they might ask their suppliers upstream to lower their prices. If the suppliers don't lower prices and Apple absorbs the costs, their gross and net profits will go down. So it's really a dilemma, right? If they do pass the costs on to consumers, but consumers aren't willing to pay or decide not to buy because of it, that's another problem. If revenue and transaction volume both drop, that's not necessarily good. As for stocks up in pre-market US trading, Albemarle Corporation is up 2.2%, Lowe's 2%, Valero Energy, Hershey, and Colgate are all up about 1%. Not a huge increase, but energy companies still see bigger gains. Devon Energy and Chevron are still rising. So what about companies that are down? There's First Solar, which was downgraded. Its rating was changed from buy to hold or something like that. So First Solar is down 5% in pre-market trading, which is quite a big drop. Decker's Outdoor is down 3.6%, and Newmont is down 2%. Other companies like Carnival, Applied Materials, KLA, SanDisk, and even Micron Technology are all down about 1.5% in pre-market trading. That's probably because they went up too much in the past couple of days. They rose too sharply, so after such big gains, there's now a pullback. So today, there are actually more companies declining, especially those we just mentioned, mainly the memory-related companies that were originally strong. So in the US stock market, it looks like today will also be more about a correction after big gains. In the very short term, that's how things are. As for the Dow Jones Index, it's really strong, once again hitting a new high, up 1% yesterday. It's steadily moving closer to the 49,500 point mark, and the monthly and quarterly moving averages are still supporting the bullish trend. What about the Philadelphia Semiconductor Index? This converging triangle, actually, it's not really a converging triangle. Its movement looks more like an ascending wedge pattern. Yesterday, it rose by 2.75%. Take note, even though it's already touched this ascending resistance line. Whether it can effectively break through and hold above this level still needs more observation. If this ascending wedge pattern isn't handled carefully, and after rising, it really starts to fall and breaks below this upward trend line, then the pressure from the pullback will be quite significant. So, as always, stick to the same principle. When the price surges upward and hits a new high, there will definitely be some profit-taking pressure. For stocks or indices that reach new highs, you should take some profits first. Then, when it pulls back, wait for it to stabilize above the moving average or neckline before making new arrangements. This is a strategy where you operate back and forth, or it's a relatively safer approach at this stage. Finally, let's talk about the Magnificent Seven. They've been a bit weaker lately. I feel like it's because Apple is dropping, Tesla is dropping, and companies like Microsoft and Meta haven't gone up either. So in the recent market, especially at the start of 2026 in January, it's been the non-Magnificent Seven, the other small and mid-cap stocks that are rising, while the Magnificent Seven are actually taking a break. But honestly, after this period of consolidation and rest, if the index wants to move up again in the future, the Magnificent Seven will still have to play a very important leading role. In the short term, just keep an eye on the 50-day moving average and the quarterly moving average. As long as those levels hold, then there really is not too much of a problem. But if they cannot hold, if it drops below those levels, be more cautious. Just be a little more careful. That's all for the Magnificent Seven content, bringing you the latest updates before the US stock market opens. If you found this helpful, please like, subscribe, and share during the break. Finally, I wish you all successful trading, and I'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.